As we close out a week that's been undoubtedly a historic one, the breakdown in relations between Europe and the US, the comments in Davos, then the potential deal over Greenland, and now we appear to be where we were a week ago. Nonetheless, as we enter a new week, there's potentially a flare-up in Iran, but also the idea that we could see some semblance of normality as we look forward to a week that has rate decisions from the Bank of Canada and the FOMC alongside inflation out of Australia and earnings from 4 of the 7 Mag 7 names. So first and foremost, we're going to be looking at the big ticket items as we always do, according to Trading Economics for the week ahead. So this video is going to be focusing really on the economic side of things. And notably, we can see here really Wednesday's the big day of note. And like I said, we also have, and perhaps I'll do a video on Monday about this, we've also got 4 of the Mag 7 names reporting, but 3 of them are reporting on Wednesday. So Wednesday is going to be absolutely massive between earnings and central bank rate decisions. Then the back end of the week, we've got inflation data out of Germany, GDP figures out of Europe as well. Certainly Europe in the limelight, and it'll be very interesting to see where things go from here, because it appears to be the case that the US is essentially distancing itself from Europe, but the potential to move some of their military out of Europe. And therefore, as Mark Carney said in his really telling speech in Davos, perhaps it's the role of these middle countries to try and club together and essentially cooperate to a much greater degree to increase the size of them and their footprint, because if they're all doing so on a singular basis, that they're kind of out in the cold. Okay, so on the US front, here's what we've got on the schedule for the week. You can see kicking off core durable goods on Monday, the weekly ADP figures on Tuesday, consumer confidence, the Federal Reserve's interest rate decision on Wednesday, jobless claims, factory orders, PPI, Chicago PMI. Of course, the big ticket item here really will be that FOMC meeting on Wednesday. By and large, markets are pricing a very, very small chance of a rate cut. So do not expect much on that front. Now, in terms of the outlook from the Federal Reserve, we have got, by and large, sort of sideways movement in terms of unemployment and the core PCE. Of course, we've got the dual mandate for the Federal Reserve, which means if they see a rise in terms of inflation or a fall in terms of inflation, they need to react. But then they also need to do the same for unemployment, right? If unemployment starts to rear its head, then they need to potentially ease. The problem they had been seeing is the potential for a rise in inflation and a rise in unemployment, meaning that a rise in inflation means they should raise rates or keep them steady. Rise in unemployment means they should cut rates, and therefore they have to prioritize one over the other. Well, given the fact that we're now seeing relative stability on both fronts to an extent, you have to think about which of these will they prioritize. Well, they already have cut rates to a great degree. And it's worthwhile noting that whilst inflation at the moment does appear to be under control, you have got different metrics. This is the Fed's favored core PCE price index. But we've also seen CPI recently, and that was by and large under control. Nothing too concerning there. But also we have alternate measures of joblessness and unemployment within the US, and the job creation numbers, of course, under the non-farm payrolls figures have looked concerning for some time now. So the unemployment rate is a sort of headline number, but you get much more movement within some of these other metrics, and the NFP figures have been key to the idea that the Federal Reserve needs to do more. But nonetheless, of course, as we move forward, we're moving towards the back end and the final months of Jerome Powell's tenure at the Federal Reserve. And so whilst there's question marks on who's going to follow him, there's question marks also as to whether we're actually going to see any more rate cuts under Jay Powell. As you can see here, you've got the 6th, well, 17th to the 6th, all very Americanized here. How dare the CME? Basically, you've got June priced in as the next rate cut. And you can see it's quite a significant shift in terms of that pricing. So markets are pricing a 72% chance that we don't see a rate meeting. So you can see 71.9% chance that we still see rates at 350, 375 by that April meeting. But things change in June, and the primary reason for that is that we're going to have a different person at the helm. And so markets expect a rate cut in June, but then by and large, keeping things steady, potentially another one at the back end of the year. So maximum 2 rate cuts this year. Of course, a lot can change in terms of the data over that time, and certainly if we see further deterioration in terms of the jobs market and inflation remains under control, it does provide the basis for them to ease further. There's also the fact that we don't know exactly who's going to be the Fed chair. We don't know exactly what their ability to impact the Federal Reserve will be, but we have just been seeing just this week gone the case against Lisa Cook at the Supreme Court, and certainly, you know, it's everything that's happened in terms of the case against the Federal Reserve and the politicization of the Fed really hasn't sort of strengthened the case to try and push Lisa Cook out. As I'm just checking now, as far as I know, we haven't we haven't got a result on that, but I think there's a good chance that they find in her favor, because if you're talking about the independence of the Fed, it's getting quite obvious exactly what's happening here at the moment. So if we didn't see Cook replaced, then that makes it more difficult for whoever is the Fed chair, even if they promise Trump that they all cut rates. You know, there's a committee of people. You could have everyone apart from the Fed chair voting to pause, and it's just the Fed chair that seeks a cut. So let's see exactly how things play out. There's uncertainty on exactly who's going to be the Fed chair, and whether they're going to essentially utilize the interest rates as their key sort of relate in the economy, or whether it's a case of asset purchases or quantitative easing as a way to lift asset valuations. I mean, ultimately, I think, you know, Trump will probably be happy with that as well. So there's some question marks, but certainly as things stand, we're not necessarily seeing much movement in terms of rates over the course of not just this meeting, which, as you can see here, market's priced a 95% chance that we keep rates steady, but also the following 2 meetings, which take us into June, essentially, as the next potential mover on this front. Now, in terms of the sort of markets to watch, I just wanted to bring up a couple. First and foremost, we've got to talk about gold. I mean, this, in actual fact, you know, if I was to overlay the likes of platinum and palladium and silver, gold's now the slow one in all of this, but everyone loves it. And, you know, it's such an incredible trend. It's been working out absolutely perfectly. Each time it pulls back, it then gets bought up once again. You can see here, you know, the resolution of the sort of US EU thing. Yes, we saw that run up because there was a fractious relationship. Are they going to go with their military? And then we see Trump speaking, no, we're not going to use military. Oh, in actual fact, we've now got a deal, which now tariffs are off the table. So we see the pullback, and then almost instantaneously, you know, you return the same time the next day and you're back up into record highs. So we're pulling back a little bit here. But, you know, I think it's more of the same, right? I mean, we could come into trendline support. We could come into a little bit of a deeper pullback, but essentially you just got to keep watching these swing lows. On this occasion, we've got 47.55. You know, as long as we don't break that, then retracements are all just part of the story, really. You know, markets don't go up in straight lines. They pull back and rally and pull back and rally, pull back, rally, you know, and that's what makes up a bullish trend. And certainly if we see something from this meeting that might indicate the possibility of easing before Powell leaves, you know, all more the reason to expect further upside for gold. But if we did see hawkish sentiment, well, that won't really change much, because the Federal Reserve, by and large, markets don't expect much from them anyway until Powell's out the door. And that's when things can potentially sort of change over. And then I wanted to look at the Dow. I was trying to see if there's any particular sort of dynamic indicator that might help us on this one, but nonetheless, I mean, look, ultimately you've got very clear-cut uptrend in play. We sort of pull back into a deep pullback here, but generally what happens here is a lot of the time when you see that sort of sharp rise, a lot of the time you can get a relatively deep pullback within that in terms of size, you know, and we've seen this here with the 76.4 fib now coming into play. We didn't tag it, but we came pretty much at that level. Now trying to break through into new highs once again, you know, stuttering a little bit, and you can see, you know, 1, 2, 3, 4, 5, now 6. So we've attempted to break through this zone, sort of 49600 on a number of occasions now, and we're starting to roll over a bit. So do we see a pullback here? Possibly over the short term. But part of that, I think, is probably going to be the fact that we've got these earnings coming up, right? So there's a lot of uncertainty over exactly what the tech earnings are going to look like. But if they are strong, then it provides us with another quarter of breathing room, I guess, for people to stop worrying about the whole potential implosion of the tech space. I think the AI trade has plenty more legs in it yet. But of course, each time you come around to earnings, you worry that this is going to be the quarter that you suddenly see some chinks in the armor that people jump on. So, as long as we respect this resistance level that you can see here, then yeah, we could pull back a little bit. But I do expect the bulls to push us up into new highs soon enough with a move through this 49690 required to really get me back into play. Essentially, I just think it makes more sense if you're looking down here for longs. That makes sense. If you're looking for longs on the breakout, that makes sense. But when you're so close to that breakout level and you've respected resistance, doesn't really make sense up here in my mind, because you've got two possibilities. You either break higher, and in which case you don't need to move that far to get into the level where you feel a lot more confident, or else you break lower, and in which case, you've got such a long way for the kind of area where you'd be sticking a stop loss. It just doesn't make sense. So, prior high or a deep retracement, those kind of areas look interesting to me. But ultimately, I do think the bulls will win out once again, which, following a pretty topsy-turvy week, we can see the win not so far off record highs once again. And then I wanted to touch on a couple of topics that are Canada and Australia, and essentially wrap it up into one chart. So first and foremost, Canada, Bank of Canada interest rate decision on Wednesday. I presume I have not. Okay. I've not put the expectations, but markets expect to see the bank keep rates steady. I'm just double checking. Exactly. Yep. So markets aren't expecting much. I mean, it's a 225, so it's already very low at the moment as is. Then you've got GDP data coming out on Friday. In terms of some of the sort of key data around this, you can see here, sort of inflation has been moving a bit higher. But as you can see here, the 3-month annualized points towards sort of more near-term price pressures, in actual fact, moving towards the downside. So inflation easing off there. Unemployment has been rising quite significantly, but pulled back a little bit and then moving a little bit higher once again. Of course, there's major question marks over the economy, given the relationship with the US appears to have soured to a ridiculous degree, where you've essentially got dictators in the Board of Peace gets cancelled because you must not speak down to the supreme leader of Trump. So yeah, anyway, strange world we're living in. But what I think is interesting here is if I go on to this chart here, we've got the Canadian dollar relative to the price of WTI. So yes, the Bank of Canada interest rate decision is a big one for the week, but in actual fact, you've got to be following what's happening in terms of oil prices. It's such a key export for the country, and you've got that close correlation between the CAD and WTI. Then the flip side of it is we've got inflation data coming out of Australia. Expectation is that we see the year-on-year figure down to 2.9 from 3.4. In actual fact, that comes off the back of a pop recently in the sort of quarterly numbers, but they've more recently moved on to a month-on-month basis, which is much better. But we don't have that much data for it. But as you can see here, in terms of as well, there we go. We did see that sharp pop, but now we've sort of normalized to a great degree. And more recently, the month-on-month figures have been relatively low. That's helping drive the annual figure lower. You can see that sort of topping out and rolling over once again. And much like we were talking about the CAD, this is the chart for copper against, this is the chart for Aussie CAD against copper to WTI. But essentially, that chart that I showed you in terms of the relationship between WTI and CAD, there's a similar relationship in terms of copper prices to the Australian dollar. Now, you could say, well, the Australians export more iron ore than they do copper. However, copper, Dr. Copper, as they call it, is the sort of bellwether for economic activity, particularly in the sort of mining space and infrastructure build out and everything that's happening in terms of the electrification around the world. Copper is at the forefront of this. And copper has been on the rise, most notably against the likes of oil. And so that rally has provided the basis for upside for the Australian dollar against the Canadian dollar. So really, as we enter this week that is going to see the Bank of Canada rate decision, the inflation data coming out of out of Australia, as much as those releases are notable, I think it's worthwhile also noting that you're essentially trading copper against oil. And so, I think copper is going to do very well. I think there's a growing story around the potential strengthening of oil prices. And certainly in a week that's potentially going to see the US sort of sitting their warships on the coast of Iran, maybe we could see that pop in terms of oil, and in which case maybe you see the response coming into play in terms of a sort of turnaround for this chart. But here's the chart, as we're saying, for the Australian dollar against the Canadian dollar, and then copper versus WTI. So you can see up and down and up and down and up. The pullback here, very close correlation. It's not a line that's exactly sitting on it, but generally when you sort of move it, then it sort of shifts around all sorts of places. But really, you've got a very good correlation here, and so that points towards the fact that we've got this copper to WTI ratio on the rise, points towards the upside breakout that we're seeing here in terms of Aussie CAD, right? So you've got this long-term downtrend, but more recently sort of breaking through resistance levels, pointing towards a potential bullish reversal coming into play here for Aussie CAD. So have we seen a bottom here? Are we now due a spectacular rise for Aussie CAD? Potentially. But like I said, this week ahead could be really interesting for oil if we do see things really ramping up. But prices, as you can see here, sort of consolidation and a big burst higher. So this is a big mover, right? So sideways consolidation, burst higher, sideways consolidation, burst higher. So a really good chart to be watching out for at the moment. It, of course, is topical given what's happening on the economic calendar, but also bear in mind that this is a commodities story, and copper in particular I expect to be doing very well, which means that I do expect further upside to come for this pair. Quite when we see that oil resurgence story come into play, I don't necessarily think that it's going to be a prominent story for this year, but I do see it down the line because low oil prices mean that essentially US shale gets shut in. We don't see the same kind of investment. And then that sort of impacts on down the line. I don't think that's an immediate story, whereas the sort of copper squeeze we're seeing at the moment, I do expect to continue. So that means I expect to see further upside to come for Aussie CAD. So that's a key market to be looking out for at the moment. Look at that. Little consolidation and pop. Great market. So hope that's useful for you guys. Make sure to like, subscribe, follow for more. Like I said, I'll try and do a video at the beginning of next week around the big tech names, because of course that's going to be a massive one for the week ahead. Thanks a lot. Have a good weekend. Cheers.